Everybody for joining us today. Imagining most of you are listening to this working remotely from home. I'm also working remotely from home today, and I have been for almost a month now. We have been at MEFA, so everything is going well at MEFA. We are, just doing our regular business, answering phone calls from customers. We are able to set up video conferences with customers. So if you need help and you want to schedule a one-on-one appointment, we will be setting that up for customers. You can also email us at collegeplanning@mefa.org. So again, we are recording this webinar. Okay, everybody, sounds like everybody can hear me okay. So let's get started. Again, my name is Stephanie Wells. I've been at MEFA for a little over 19 years now. Been working in higher ed financing for over 25 years. I do a lot of different things at MEFA. I work in the college planning team, helping families with guidance and answering questions about financial aid and the process, as well as how to finance college, saving for college, basically everything that has to do with the college enrollment process. And I'll be your presenter today. So a little bit about MEFA and who we are. We are a nonprofit quasi-state authority. We've been around since 1982, so we've been in business for a long time. We started out to create loans for families, but since then we've gone on to offer lots of products and services. Our biggest service that we offer here at MEFA is guidance for families, free educational information about the college enrollment process. We do have products that you can check out on mefa.org, such as savings plans and loans, refinancing loans, things of that nature. We are up and running, even during this pandemic, remotely to answer phone calls, so feel free to call us at 800-449-MEFA. We are all working remotely in our homes and really have had no glitch in services. We've been able to get up and running right away, so we're able to talk to you and email you. So feel free to send us emails at collegeplanning@mefa.org if you need any help, or if you want to set up a one-on-one appointment over the phone. We can also do a video chat. So really, whatever you need, just get in touch with us. And the only thing we obviously can't do is meet with you in person, which is totally understandable during this time. So again, for those of you who are just joining us, we are recording this webinar, and the handouts of the slides are in the handouts section. So I know it is a unique year for high school seniors, the way you're ending your high school remotely from home. It's not the best of circumstances, but hopefully everybody's managing and getting through. Probably many of you may not have been able to go on campuses to, go to those open house programs that we like to advise families to do. But a lot of colleges are doing video programs, so you can do that. Some colleges have even changed their deposit due date to June 1st versus May 1st. I've talked to some schools who have, some schools who are sticking with the May 1st deadline. And it seems from what we're hearing that colleges have been able to get their financial aid awards, and they're also successfully working remotely as well. So hopefully you're doing okay in these difficult circumstances, trying to navigate the decision that you and your students are about to make, which is a very big decision. So hopefully we can help you out with that. I will say right up front, if you have any questions about a school's policies, their due date for deposits, anything about financial aid, I would recommend visiting their website first and find out the best way for you to reach them. Some schools are able to answer calls, some are having more difficulty because they don't have a remote phone system, so it's easier to get an email from you and then maybe they can call you. It really is going to depend on each school, how they're operating under these remote working environments. So best advice I can give is to check the website first and email them. That's going to be your best option. But some schools you may be able to talk to on the phone too. It really just depends on the school and the department also. So feel free to send those questions through the chat feature throughout the webinar. We will answer those as we go, and I'll stop a few times throughout the webinar to answer questions. And we are recording this webinar. So here's what we're going to cover today. Hopefully you'll understand your financial aid award offers. We will go over those line by line, talk to you about your options for paying the bill. If you haven't applied for aid, what are your options? It's not too late to do so. Make sure you understand your balance due and how to calculate that and figure that out with your financial aid award and what you actually owe. What is your net cost? And then developing a plan beyond this year, as well as how to pay that bill. So we'll get into that. So just a quick brief high-level overview about financial aid. Many of you may have gone to one of our financial aid nights in the fall and learned a little bit more about different types of financial aid. But basically, the financial aid that's on a financial aid award letter is going to be based either on merit or financial need. So merit-based aid typically is coming through the admissions office if it's for academic achievements. Really what the college will do is look at the overall admissions application and decide who among the applicants to their school they will give some of their merit-based scholarships and grants. The criteria for this merit-based aid can differ from school to school, and even within a school, different types of scholarships may have different criteria that the student needs to maintain to keep that scholarship. For example, a minimum GPA requirement. At some schools, they may have different levels of scholarships. So the higher the amount, the higher the GPA requirement. It really depends on the school and the scholarship. So you'll definitely want to read the admissions letter from the school that you got and find out what those criteria are. When I think about merit-based aid, I really think about that as a part of the student's contribution towards the bill. They've worked hard to get this scholarship. It could be a significant amount of money. And so that could be a nice, chunk of money to put towards the bill, but they need to understand what their responsibility is to keep that scholarship. So you want to find out if the student doesn't meet the GPA requirement, for example, will they lose the scholarship? Will they be able to get a semester to get their grades back up? Will they lose a portion of the scholarship? Really depends on the school and the award. If it's an athletic scholarship, obviously there might be things tied to that, or artistic scholarships, maybe different majors. The scholarship is based on, they have to stay within that major. So you'll definitely want to know, what's the fine print? What are the requirements? Most of the financial aid that's given out nationwide is based on financial need. So need-based aid is what we call that. It's awarded based on those financial aid forms that you filled out, the FAFSA form, as well as at some schools you may have filled out a CSS profile form. It's based on standardized formulas, and most schools are not giving out 100% of what a family might need. So you may qualify for a certain amount of aid, but most schools cannot afford to meet 100% of the family's needs. So you may have what we call gaps in a financial aid award between what you owe and what you've gotten in need-based aid. So it is very common, but most of the aid that's given out from the federal government, the state government, as well as colleges, is based on this need-based formula. So here's just a small example of how you may see your financial aid offer laid out, and your offer may be coming in the mail. It may be on the student's web portal through the college. You may have to download the award. Really depends on the school and how they're getting their information out to families. But the types of aid you should see on there will come not just from the college, but also the federal government, as well as the state government, if you're eligible for any Massachusetts aid, for example. So here we see all three types of programs. So we see a grant from ABC University, and usually the college will lay it out between fall and spring. So you'll have your annual total, and then you'll be able to break that out by semester. And you can also see some of the federal grants, a Mass grant, which is a state grant, and federal work study and loan programs. So grants and scholarships are free money that is given out, and students do not have to pay that back. So that's the real good stuff that we talk about when we think about financial aid. But financial aid is not limited to the free dollars. It's also considered work study as a form of financial aid. Work study is a federal program that's offered by the federal government that allows students to work part-time, 10, 15 hours a week, for example, in some different places on campus, maybe the cafeteria or even the financial aid office. And they get a paycheck every couple of weeks, and that money is used towards paying their unbilled expenses like books, supplies, transportation. Typically, colleges aren't putting that award towards the bill. So you can see in this example, the student received $1,500, but that $1,500 is not necessarily going to show up as a credit towards their bill. That will be money that they earn in a biweekly paycheck to pay for some of those unbilled expenses. Then we also see loans on here. And when I talk about loans as being financial aid, I'm really focused on the federal direct student loans. There are federal parent loans, which are federal loans that parents can borrow, but those aren't financial aid. Even though you may see them on a financial aid award letter, it's not financial aid because it's a credit-based loan if it's in the parent's name. But the ones we see here are typical for a financial aid award. For a freshman, for example, they can receive up to $5,500 in this type of loan. And it might be broken out based on subsidized and unsubsidized. So I'm going to talk in more detail about that loan rates and all that good stuff in a moment. So I won't get into too much detail here, but we will talk in more detail about that type of loan. So you can see aid from all different resources on a financial aid award. And the award letters might be laid out differently from school to school. But you will need to accept all or part of the award by the college's deposit deadline. So make sure you know is that usually it's May 1st in normal years, but these aren't normal times, of course. So check and see if your school has a later deadline, potentially of June 1st, because some schools have given June 1st as a different deadline this year, just because of all the, the issues that everybody's facing with this pandemic. So here we see more details about that federal direct student loan I mentioned. You can see the annual loan limits in the blue box at the right-hand corner. So as I mentioned, a freshman can receive up to $5,500. Up to $3,500 of that could possibly be subsidized. And that means that interest is not accruing while the student is in school. So interest will be deferred until they graduate. And so basically the loan's interest-free while they're in school. Now, not every family and student will qualify for that subsidy. So you may or may not receive any subsidy, or you may not receive the full $3,500 subsidized. But every student can borrow the full $5,500. It just might be all unsubsidized, or a greater portion of that is unsubsidized, meaning interest is going to accrue on that loan while the student's in school. Now, no payments are due while the student's in school, but interest is accruing, so it's a good idea if you can afford to make payments on that interest voluntarily while the student is in school, so that when they graduate, that interest will have been paid off before it can be capitalized and added to the principal balance. So this loan is really one of the very few ways that a student can borrow on their own without a cosigner. And a 18-year-old may be limited to no credit, might not even be working full-time. And so typically they're not going to be able to borrow credit-based loans without a cosigner. So this is a nice way for students to help take on some of the responsibility for borrowing if the family does need to borrow without any cosigners involved. The interest rate is fixed and it changes annually every July 1st. So the current interest rate is 4.529%. That's for students who are in college right now that have a loan. We'll find out probably in the next month and a half or so, what the rates will be for the 2020-2021 academic year. There is a small fee of 1.059% deducted from this loan. And once a student selects what college they're going to and makes that deposit, then the financial aid office will be in touch and send students instructions on how to fill out their master promissory note online, as well as do their entrance counseling so that they understand what their rights and responsibilities are as a student loan borrower. So they'll have to go through that before they'll actually be able to have that money dispersed to their student's account. Now, when they graduate, they will have lots of different repayment options to choose from. And there are certain benefits that federal direct student loan borrowers can get that they wouldn't otherwise if they borrowed maybe through a private lender. So that's why when we talk to families and they're thinking they might need to borrow, we tell them to use this loan first before they borrow through MEFA or a Federal Plus loan or any other private lending, because there are sometimes better rates, but also these sort of benefits for deferment while they're in school, and all sort of different types of repayment options. As you may have heard, the federal government has just passed a bill to help students, so that information can be found online, but that is limited to these federal direct student loans, where there'll be a interest-free portion and students won't have to make payments for a few months, but those are only through the federal direct student loan right now. So if you have students who have a federal direct student loan, they should contact their loan servicer. And any other types of loans they may have, they should still contact their student loan servicer if they do need assistance. So if you have other students who might be in repayment already and they need assistance, they should definitely reach out to their loan servicer that can help them through this difficult time. Some of you may have to go through verification, which basically is a way for colleges to verify some or all of the data on a financial aid application. Students could be selected by the Department of Education in addition or instead of the college, but all the verification requests will come directly through the college, even if it's for the Department of Ed. The college will reach out to you on their behalf. So you want to make sure that you're reading the mail and going on the student's web portal to make sure you know what's requested. If you have any questions about what they are looking for, feel free to get in touch with the financial aid office if you're not sure. Typically, some of the things they'll be looking for are tax return transcripts. They may have a worksheet for you to fill out, business statements, things like that. But it's really important to go through this process if you've been selected for verification, because your financial aid award will not be complete and you will not get credit on your bill until this process has been successfully completed. If you haven't applied for financial aid, you still have the option to do that. You may have missed some of the college's deadlines for their own aid, but federal aid is given out year-round. State aid from the state of Massachusetts, you need to apply by May 1st. Fill out that FAFSA by May 1st. Some families, maybe they have very high incomes, may decide we're not going to apply for financial aid for whatever reason. But we still recommend, even if you think you might not be eligible, to still apply, because for some of these colleges, their cost is so high that you may have some eligibility for aid at some of the higher cost private schools. So it never hurts to apply. And if the student wants to borrow that federal student loan, they will need to fill out that FAFSA. So there's that benefit for applying as well. Payment plans, which is a budget plan available through the college, which we'll talk about. You do not have to have filled out the financial aid forms to take those out, as well as private loans, such as loans through MEFA. You do not have to file for financial aid. But of course, like I said, we always recommend that families apply for aid to make sure they've gotten everything they might be eligible for. So let's talk about the wait list before we get into the actual awards, and I'll have some demos for you as well. If your student was added to a wait list, keep in mind that many schools have very long wait lists and may not accept any or very few students off of the wait list. So don't count on getting off the wait list if it's the student's, top choice school. You have to deposit by the school's deadline at another school that the student was accepted to, so that you have a spot. Now, many schools aren't giving financial aid to students who they take off the wait list, so they are looking at financial aid need. So it's important to find out, again, if you're looking at a school and you're on the wait list, what is their financial aid profile or formula and policy for waitlisted students. If you go through all those steps and you still decide, yep, we want to be on the wait list, you do have to formally accept your spot, the student spot on the wait list. May not hurt to write a short note to the admissions counselor, update them with any recent grades or test scores that might enhance the admissions application, be in touch through social media, really anything that can help show a demonstrated interest in the school and beef up that admissions application. So calculating the balance due, I'm going to go through this and then I'll stop for a minute just to answer some questions. We have this great calculator on MEFA.org, and if you have the hyperlink right here, you can see it. Or if you go on MEFA.org, just type in college cost calculator and it should pop right up. So I'm going to demo this for you. And it's just a great way to compare different financial aid awards. And you can also, if you prefer, you could create a spreadsheet that would do the same thing with using these fields. So I'm only going to type in one school and for a bit of information just to demo the calculator. So I'm going to pretend that College A is a private college, and let's say their tuition and fees is $55,000, which in the Northeast is typical. And then we have room and board, which is let's say it's $14,500 as an example. Now, room and board, ways you can save there, going with smaller meal plans. If you decide after the student's first semester they're not using the full meal plan, you might want to go to a cheaper plan. Choose room options where the student has roommates, maybe a quad or a triple, so it's a little bit cheaper than maybe a single. Maybe one of the older dorms versus the brand new dorm that you saw in the open campus tours. Those are some ways that you can save. So tuition fees and room and board, they're going to be billed costs. Then we have books and supplies that, I'm just going to put in $3,000, which is an average number that schools recommend for books and supplies. And we have transportation. That's another unbilled cost, but you do want to prepare for those expenses. Hopefully the student can work over the summer and pay for some of those out of pocket so that you don't have to borrow for those expenses. Health insurance here in Massachusetts is required. Every student needs to be insured. So you will have the option to purchase the campus's health plan. However, if the student is sufficiently insured under your family's policy, then you can waive that health insurance cost. So you can see right here, if you hover over these little I buttons, these little blue bullets, you can get a little bit more detailed information. So make sure that you waive those health insurance costs if you don't need their health insurance plan. So then if I scroll down, we can see that the calculator is adding up our annual costs of $73,000, which is a very big, scary number, but that's a real number. So got to be honest here. Then let's put in, maybe we got a federal Pell Grant, maybe a small federal SEOG grant, maybe a small grant from a mass grant from the state. And then between merit and maybe need-based aid from the college, maybe they give a nice award as well. You can also put in outside private scholarships here. So check with your school counselor. Hopefully everybody apply for some local scholarships. We also have a couple websites here where you can do some online searches. You want to search for outside scholarships. So I'm just going to leave that blank for now. So again, adding up our annual gift aid. So that is our free money from financial aid. Then we have our student loans, which are also financial aid, but they're not free. We have to pay those back. So for a freshman, I mentioned they can get up to $3,500 in the subsidized loan, and then the rest would be an unsubsidized loan. And then maybe the family has decided they're going to put $5,000 a year out of a savings plan from other resources. So if I scroll down, you can see we have our remaining costs. So once you start adding in the numbers and taking out the aid and going through this process, you can really see that that big scary number of 73,000 might be more manageable once you start applying the financial aid that you have, as well as any other resources, such as savings, for example. And then you can add in up to 4 schools. You can save this. And it's just a nice way to be able to line up the schools side by side without the award letters and all the materials and brochures that the school has sent you, and really just look at the numbers. Again, a spreadsheet would do the same thing. If a college, for example, I mentioned a Family Plus loan, which is a federal loan for parents. Some schools do put those in a financial aid award, even though they're not financial aid. You could put that in here too, just to see, what colleges are packaging credit-based parent loans, which is not something that you're required to take out. You can pay for your balance due however you choose to. Okay, so I'm going to just look at the questions real quick, see what we have here. I do have a question about applying for a MEFA loan, and I am going to talk about MEFA loans in a bit. But you really don't have to apply for any credit-based loans until closer to when you're going to be receiving your bill. You do have to wait until you've chosen a school to apply for any additional loans on top of your financial aid. But really for MEFA loans, anytime April 1st, you can start applying. So those are available now, but you do need to know what school the student's going to. And typically with this process, the credit is instant credit decision, but we always recommend give yourself a couple weeks before the bill is due to make sure the loan goes through and that you don't run into any issues, so that you have, some time to come up with another plan. So there's a question here, is there a chance to get a scholarship from schools out of state if a student gets accepted? And the only way really to get a scholarship from any college is to apply for financial aid at that school. And then the school will decide based on their admissions criteria and the funding that they have available, whether they will award your student that aid. So you can check with those schools to find out what their financial aid policy is. But there is opportunities. It just depends on where the student lines up in these students who are applying. There are some schools, for example, in Maine, they're giving tuition discounts for Massachusetts residents who want to go to UMaine. So you do see some benefits there for different campuses that are trying to attract out-of-state students. But you would want to check with the individual schools to find out what they have available. So question about whether the interest rate is likely to go up or down. I can't tell you. I don't have a crystal ball. Right now with the market and economy the way it is, I wouldn't even venture to guess what interest rates are going to look like even a month from now. So we'll just have to wait and see what the Feds end up doing. Hopefully the rates go down, but I wouldn't even venture to guess right now. And then also with the Parent Plus loan, I have a question about when that Plus loan is available. You'd have to check through the college's website to find out. Again, that rate is much higher than some of the private loans out there. So just look at all your options. You still have plenty of time. Usually bills don't go out until June timeframe. So you should be fine for now. And you do have to be a U.S. resident, U.S. citizen or permanent resident to take a Parent Plus loan, or for a MEFA loan, for example. So if a parent is undocumented, you want to just check with the lender about their criteria. Some lenders, you can go on a college's website to see if they do have loans for undocumented families or even international families. All right, so let's keep going and talk a little bit more about some of the results that you can use that calculator just to compare, what is my bottom line in each school? Don't just look at the cost of the school. Don't just look at what you got in financial aid, but really do that cost minus aid comparison of each school to figure out what your bottom line result is. What are you going to pay for 1 year? And remember, you're probably looking at a 4-year commitment. So can you afford to do that not just the first year, but for 4 years? And if borrowing is part of that plan, is the student going to graduate school where they may need to borrow additional funds on their own? If your family is borrowing, let's say a MEFA loan, is the student expected to pay that back? If so, will they be able to? If they're going to grad school and they have their own federal student loans to pay back. So you really want to be careful about over borrowing and make a good plan for a school that is affordable. Academics, location, all the things we talk about when students are looking at colleges are all very important, but the price and what families are borrowing is critical to look at. So families come up with different strategies, and we recommend that they look at past, present, and future income to create a combination strategy to pay the bill. So first thing is to look at past income, which is in the form of savings. So have you been able to save? Maybe a 529 plan. Was grandma or grandpa able to save anything? Do you have savings bonds? Let's dig those out. Has a student been saving on their own? Things like that. Look at savings first, see what you have, take stock of everything and what you want to use each year. How do you want to distribute those funds? So let's say you save $16,000 in a U fund account, a 529 plan. You may decide you want to use it all the first year and not borrow. Or you may decide I'm going to spread it out over 4 years and do $4,000 a year. It's really up to you. It's your money, but how you want to utilize that. We recommend that you reach out to your investment plan to get more certified financial advice on that. And if you have a U plan or a U fund, the phone numbers are right here. You can go on MEFA.org for the U plan to create a strategy with your MEFA savings accounts. Then once you've exhausted what you have in past income, you can look at present income. Present income would be in the form of either writing out a check when the bill is due or using a payment plan. And every college has an interest-free payment plan where you can make budgetary payments over 5 to 12 months. So rather than making a lump sum payment in the fall and then another one in the spring, you can spread out those payments so that you can get yourself on a monthly budget. This is a great way to help reduce the amount of borrowing. Even if you don't have enough that you can afford per month to put all of what you owe on a payment plan, you can still put a portion of it just to keep that borrowing down. So check with the college to find out what their plan looks like, when it starts, how many months. There's usually a small enrollment fee of maybe $50 to $100 to participate, but it is interest-free and it's not a loan, and you don't need credit. Anybody, undocumented families, international families, US families, anybody can use the plan. So just check with the school's website to find out more about what plan they offer. Then once you've exhausted past and present income, you would be looking at future income if you still have money that you owe, and that's going to be in the form of borrowing. So we always recommend, even though MEFA is a lender, we are a nonprofit, so we want to help families borrow the least amount as possible and really try and come up with strategies that minimize that borrowing. But just keep in mind, above and beyond that federal direct student loan, if you're looking to borrow, let's say a MEFA loan, for example, you do have to have good credit. Lenders are looking at credit history for approval, and oftentimes the higher your credit score, the lower your interest rate. So your rate could be attached to your credit. So it is important to know what your credit history looks like. Check out your credit scores. And of course, only borrow what you need. I talked about billed and unbilled expenses that are all part of that cost of attendance. And you don't have to borrow for the unbilled expenses if you can afford to pay for those out of pocket. You know, maybe have the student work over the summer to pay for their own books, and pay for transportation, a T-Pass if they're going to school in the city, pay for that out of pocket, or use their work study money for something like that rather than borrowing. You can borrow, but we always advise not to if you can afford that. And this is an annual process. So you're applying for financial aid each year. If you're borrowing a loan each year, but you do want to think in terms of 4 years. So think of a 4-year plan so that you can make sure it's not just year one that you can afford, but you can afford all 4 years, as well as if you have other students that are coming down the road that might need assistance before you take on a lot of debt for the first student. If you're expecting the student, if you're a parent and you're expecting the student maybe to help pay back a family co-signed loan, are they going to be able to? What are their post-graduation plans? Are they going to graduate school? Are they going into lower income paying fields like social work that might be very rewarding, but it might not pay much up front, so they might have trouble helping mom and dad pay the parent loans back, for example. Those are all important things to consider before borrowing. So we want to think about all this before we actually apply for a loan, and even before you deposit at a school. Make sure you have a good plan to pay for it. Now, once you decide, okay, we might need to borrow, you want to really compare different loan options. Many schools have lender lists on their website or lender comparison tools you can look at. MEFA has plans on our website you can look at, and they might be fixed or variable interest rates. Look at those repayment timelines. The longer the repayment, the lower your monthly payment, but the more interest you're going to be paid. So if you have a 10-year loan versus a 15-year loan, for example, that 15-year loan is going to be more expensive because you're taking longer to pay that back. So think about those sorts of things. Now, if you are comparing loans and you apply for a couple of different loans just to check out different interest rates, those credit inquiries are only counted as one hit on your credit score, your credit bureau, because they're the same types of loans. Now, we are going to have a couple of webinars coming up in June and July, and we'll record those as well. We encourage you to register for those. Even if you can't attend, if you register, we'll email you a link to the webinar, the recorded version, where we'll get into the nuts and bolts of borrowing in much more detail. We'll show you how to compare loans, look at disclosure statements, and really get into the nitty-gritty of loan options before you actually apply for a loan. So MEFA has a great tool on our website that can really help understanding the cost of borrowing. So I'm going to demo this for you real quick. I use this with families all the time when I'm helping them create a strategy to pay the bill, especially if the student wants to go to an expensive college and mom and dad are expecting the student to help pay back the MEFA loan. It's important for the students to see, what are those payments going to look like? What am I going to be borrowing over the cost of the loan term? So for this example, I'm going to put in $20,000, which is what we're looking to borrow. The students are freshmen, so we have 4 years before graduation. I'm going to put in that I have good credit and calculate. So you can see here MEFA's 5 different repayment options that you can choose from. And it starts from the lowest rates to the highest as we go down the row. So you can see for the 10-year loan, which is the first column, it shows you what your payment will be in school and after school, as well as the total cost of that loan. So for this $20,000 loan, for our lowest interest rate of 5.15%, that loan's going to cost a little less than $26,000 if we do minimum payments for the full 10-year term. But the further you push out the loan, if you move to the right, you can see that that total cost goes up as the rates go up and as the repayment terms go up. If you're looking at the deferred option, for example, you're not making payments on that while the student's in school, so that's going to add to your total cost of the loan. So while not making payments while the student is in school might be easier, it is going to cost you over the term of that loan. So those are just things to think about, before you actually borrow and apply for a loan. So just to wrap up this segment, and then I'll look at the questions again, our combination strategy to sort of bring everything together. If we have $20,000 that's due, we have a few different options. If we have 20,000 saved in the bank, great. You don't have to borrow, you don't have to use a payment plan, you can just make a payment, 10,000 per semester. If you are looking at the payment plan and you want to pay the 20,000 with a payment plan, it would be about $2,000 a month on a $10-month monthly payment plan. So maybe that $2,000 a month is a little too steep, so you can't put it all in the payment plan. You might not have it all saved, so you might need to look at borrowing. As I just showed you on that calculator, a $20,000 loan is approximately $200 a month. So maybe that sounds like, I can afford $200 a month, but ask yourself, can you afford more than that minimum payment? If the answer is yes, then let's borrow less and put some on a payment plan. So in this combination strategy we see here, family is going to look at their past income. Students saved a little bit. Mom and dad are putting some savings towards the first year's bill. So we chopped $5,000 off just through past income and savings. And this family, they can't afford $2,000 a month on the payment plan, but they can do more than a minimum loan payment. So they said, okay, we can afford about $600 a month. So they're going to do $500 a month on a $5,000 payment plan. So with past and present income, they've chopped their bill in half before they've actually had to borrow. Then they'll have another $100 a month on a $10,000 loan. So rather than jumping right to a $20,000 loan, look at this combination strategy to see if these options might work for you. Okay, I'm just going to answer a couple questions real quick. So question about whether having twins would make a difference in getting a subsidized loan. Having twins or having more than one student in school at the same time can increase your eligibility for financial aid. So it really depends on the school whether that eligibility will result in a subsidized loan. So you'd have to check with the college and apply for financial aid at the school to find out what you're eligible for. So students who will be on their own without a need to borrow and don't have a parent contribution, they probably won't be able to borrow beyond the federal direct student loan, so $5,500 for a freshman. We have a question here about whether students can borrow on their own. And the answer is in many cases, most cases, they won't be able to borrow without a creditworthy cosigner because most students are, young, they're 18, they might not have established credit. They're not going to be working full time while they're in school. So lenders aren't going to approve that loan without a creditworthy co-borrower. And if you are interested in applying for really any of these loans, private loans, plus loan, you can wait until you know what school the student is applying to and whether they've been accepted and what school the student's going to before you apply for any additional loans. And I'm going to go through that timeline right now. So a little bit about the timing in paying that bill. So for your fall semester bill, usually schools separate out fall and spring semester. That's typical. Colleges will be sending that bill out in June or July, and it will be due about 3 to 5 weeks later, depending on the school, in July or August. So that's really the prime time. Most families that apply, for example, through MEFA are applying in June and July. That's when we see a lot of our applications coming through, even in August, right before the bill's due, but we do recommend you give yourself a couple weeks before the bill due deadline, due date to make sure you have enough wiggle room to get your paperwork in order, apply for that loan. The school still needs to certify that loan online before that money can come in. So make sure you give yourself a little bit of time. Once you know what school the student's going to, you can set up that payment plan as soon as you want. Some of those payment plans even start in May, so the sooner you get on, the better off you'll be. So that's what you're looking for the fall semester timeline. And then for spring semester, we do recommend, if you are borrowing, to borrow for the full year. So if you need $10,000 for the fall, you're probably going to need $10,000 for the spring. You're not going to be charged interest on any loans until money is actually dispersed to the school. So colleges don't even want the spring money from lenders until usually January. So you have plenty of time before the spring semester bill is due and before the money is sent to the college to reduce that loan if you don't need the full amount that you applied for. So even if the money is sent to the school and you realize I've overpaid my bill at the school, just have the financial aid office send the money back to the lender, or a portion of it, so that you're not borrowing the full amount. With MEFA, for example, whatever refunds we get back from a college, we're going to reverse the interest on that amount and apply it towards the loan to reduce that loan. So you won't be penalized for that. There's no penalties for prepayment or reducing the loan. We want to make sure you're doing what's best for your family's financial circumstances. So private scholarships, you should never pay anybody to apply for a scholarship. There are a lot of scams out there, so just be careful of that. We have a few websites if you want to look at national search engines. It's about this time of year where families are looking at what they got in financial aid and what they're going to owe, and they're scrambling, trying to find more scholarships. Where can I get more free money? And so you can check on these websites, but also check with community-based organizations, your employer. They may have benefits, for example, for families who might need to borrow. For example, they might have help paying back those education loans. Lots of corporations are offering more employee benefits related to financing education, so see what they might have to offer, as well as any other foundations, religious organizations you're a part of. I use the example of my nephew. When he went to college, he applied for a Pop Warner scholarship. Obviously, in high school, he hadn't played Pop Warner for many years, but he did when he was younger, and he was able to get a scholarship for college through them. So really just look at all the different groups you're a part of and see what money might be out there, as well as checking in with your school guidance counselor for the local scholarships. So here are a couple websites that you can check out for information on some of the public school options that are available in Massachusetts. We have great public schools, community colleges, state colleges and universities, the UMass system. Really, pretty much wherever you live in Massachusetts, you are in driving distance to UMass campus, a state college or university, and a community college. So those should be options where if the student doesn't want to live on campus, wants to save some money there, they can commute, save a bundle, pay in-state tuition rates, and maybe go to community college for a couple years and then transfer to either a four-year public or even a four-year private. Really, it's not where you start, it's where you end up and what school is on that degree. And using our Mass public college programs, you can even get tuition credits if you have good grades, things like that. So check out mass.edu/mass transfer. Also check out Tuition Break through New England Board of Higher Education, where you might be able to get a reduction in out-of-state tuition at some of the New England colleges if a college in Massachusetts, public college, doesn't offer that program. You might be able to get a benefit there. Don't be afraid to use the financial aid office as a resource. They're there to help you. I understand that right now you can't make in-person appointments, which we always, normal times recommend, but reach out to them through email. Maybe they can set up a conference call, even a video chat, a Zoom chat, things like that. Don't be afraid to reach out to the school if you need assistance. Everybody's trying to do the best they can with the circumstances right now. But a lot of people are out of work, and you might need, your circumstances are much different than when you applied for aid in the fall. Somebody may have lost their job. So those are certain types of special considerations that you'd want to talk to the financial aid office about and see if you can appeal your financial aid award. Now's the time to do that. Don't hesitate to work with the financial aid office, especially if you're one of the millions that have been impacted by this pandemic and are struggling financially. You want to get in touch with the financial aid office. If you haven't made the decision on what school the student's attending, reach out to the schools that are still on the student's list and see what each of them might be able to do for you before you deposit, and see what options might be available. It's really important to reach out to the college and work with them. They want to work with you, and they are there to help. So we're just going to wrap it up with another couple slides, and then I'll end with more Q&A. So what happens next? You'll want to pay your enrollment deposit by the college's deadline. Make sure you look on their website or contact the admissions office, maybe through email, to see when is that deposit due. Most schools it's May 1st, but some schools have, for this year only, changed that to June 1st to give families more time. I have heard of one college where if families have till June 1st, but if they do deposit by May 1st, they're entered into a raffle to win, new TV or, some dorm equipment such as that, like a TV for the dorm, for example. So there might be incentives to deposit by May 1st instead of June 1st. So contact the college and find out. Hopefully we'll be back up and running on campuses to be able to attend and go there in person in the summer for orientation programs. So make sure you plan to attend those if they're available, depending on what happens. And of course, create a plan to pay the balance due. MEFA's here as a resource. You have our phone number. Our website is right here on the screen. Email us if you want to talk to a MEFA representative. If you want to email us your financial aid award letters to review with you. If you're really confused, kind of overwhelmed, you just want a little bit more one-on-one counseling, don't hesitate to reach out. We'll probably be creating in the next week or so a form that families can fill out online to schedule appointments, but you don't have to wait for that. Just call us to schedule something or email us at collegeplanning@mefa.org. That's probably the best way to do it. And then we can set you up with different folks on the MEFA team, such as myself and some of my expert colleagues to help you one-on-one. I wish we could see you in person to do these. We sometimes do those in the MEFA office, but this year we're not going back there for a while because of the pandemic. So we'll definitely be able to do video chats and conference calls with you. Connect with us on social media to find out everything that's happening. We'll be communicating, as well as on MEFA.org. Here's our website. And on MEFA.org, we do have updates of, how we're responding to the pandemic and the COVID-19 virus, everything that's going on, and resources that are available for our current borrowers, as well as families that need guidance. We've added a lot more webinars in the evenings since we're not able to do these programs in person, unfortunately. We're offering a lot more virtual opportunities to help families out, so take advantage of them. All right, so that's the end of the formal part of the presentation. If you found this helpful or anything that MEFA is doing helpful, we'd love to get your Google review, hopefully 5 stars, helping to beef up our Google reviews and get up to that 5 stars. So if you found this helpful, please do that. And type in the questions on the chat, and I'll start going through some of those now. So first question, where do I find a list of loans available to the student? Well, every student's going to be available for that federal direct student loan that you'll find out by applying for financial aid. And the best place to start, you know about MEFA, you know that MEFA has loan options available, so you can check out our website. But you can also check out the school's financial aid website. Sometimes many schools have lists of lenders that they work with, or they have loan comparison tools where they we'll list lenders that they know are reputable and have good rates and service, things like that. So that's also another resource to find loans. But again, above and beyond that federal direct student loan, most of those loans are going to be co-signed. Well, they'll need a credit-worthy co-signer. So I have a question here. Are most colleges anticipating returning for fall semester? I'm concerned about borrowing only to find out that they're going to delay the start or go online for an additional semester due to coronavirus. So nobody really knows what's going to happen in the fall. However, I will say that I know MEFA, we're planning that if we need to continue being virtual for as long as we need to, we'll have that ability to help families with guidance. And if you are looking at borrowing, I can only speak on MEFA's behalf. If you were to borrow, let's say in June, and the school said, oh, we're going to go online only, you can reduce the loan. That's not a problem at all. So don't feel like if you apply for a loan that you're locked into that. No money is going to be sent to the school until it's due at the school, and you have plenty of time to reduce the loan. Right now, we have families that are going through this process where they borrow for the spring semester, and schools are, giving them refunds because they didn't need the full amount because they're not paying for room and board. They're not paying for meal plans for March, April, and May. So they're sending MEFA loan money back, and we're reversing interest on that. So even after the money is dispersed to school, there's still ways to reduce and get back to what you actually owe. So don't hesitate. Don't worry about that. Schools will work with you. I can only speak from MEFA as a lender. We will definitely work with families to reduce loans if it comes down to that. But you have plenty of time before loan money are even sent to a school that you can reduce it. So you should be okay with that. But that's a really good question. So question, are grants renewable for 4 years? And that really depends on the grant. If it's a merit-based scholarship, for example, through the admissions office, I mean, usually those are set up for 4 years, assuming the student maintains a certain GPA, for example. So you'll find with your admissions letter, congratulations, student is accepted. We're going to give them $40,000, $10,000 a year for 4 years. That's just an example. When it comes to need-based aid, usually schools are budgeting for 4 years, but it is an annual process. So it's not guaranteed for 4 years. You do have to reapply each year. And as financial circumstances change for better or for worse, your aid might change for better or for worse. It really depends. So, need-based aid is not guaranteed for 4 years because it is an annual process and it's looked at each year. Okay, I have one more question. So if you have other questions coming in, feel free to write those in the chat and we will answer those. Do you only need to pay for health insurance if you aren't covered in the state that the college is located? So that's a really good question where you really should check with your health insurance provider to find out what your coverage would be in that state. It really depends on the health plan and the state that the school's located at. And we always advise families to check with their health plan provider to make sure that the coverage they have is going to be usable in another state. And if not, then you may need to invest in the school's plan, which can be, up to $2,000 a year, approximately, for health insurance. So do your due diligence now, checking with the health plan provider to see what's covered and what's not covered and make your decision from there. Okay, I don't see any questions right now. I'm going to leave it open for just another minute. We're right at 1 o'clock, so right on schedule to end the webinar. Okay, one more question came in. Let's see, how does it work if we have an immigrant single parent who's not declaring money? Is the school supposed to give more money? You'd have to check with the college. They wouldn't give more money unless you're applying for financial aid. So I would check with the school based on what they have available. Some schools do have resources for undocumented families, but it really depends on the school. so you'd want to check with them. And MEFA does have just some blogs and things of that nature on MEFA.org if you want to check that out as well. Okay, any other questions? So I'm going to leave it open for another minute. All right, I don't see any other questions coming in, so I want to thank everybody for joining us today. I hope you're all doing well, staying healthy, and getting through this national tragedy the best we can and working together. But MEFA is here for your financing and guidance resources. We're here to help with any questions. If we don't know the answer, we'll find it for you, or at least find a resource to point you to. But don't hesitate to reach out to us virtually through email, phone. We're here, we're up and running, and we know that families need a lot of help right now, so that's what we're here to help you with. And we're unfortunately sad we can't see you out in the community right now, but we'll be able to chat with you on a web chat or something like that if needed to set up a one-on-one appointment. Just reach out to us. And I don't see any other questions coming in, so I'm going to end the webinar, and we will send a recording out to everybody that registered for today. So want to wish everybody a good day, have a great week, and stay safe out there and be well. Thank you, everybody. Talk to you soon.